Today we are looking at a historic takeover deal by UBS, but before we go into the details of why the regulators are pushing UBS to take over Credit Suisse, let us rewind a bit back to understand brief history of the banking in Switzerland and the events that took place from 2008 financial crisis. Credit Suisse and UBS are the two largest banks of Switzerland, and since Switzerland is a landlocked country, the government heavily relies on its service sector, especially the financial sector. These two banks had a huge advantage because of banking secrecy laws, which protects the privacy of its client, which encouraged high net worth individuals across the world to deposit their cash in these banks. We understand that during the financial crisis both Credit Suisse and UBS faced significant losses because of the subprime mortgage issue. While UBS received a bailout of 6 billion Swiss francs from Swiss government in exchange for 9% equity stake in the bank, Credit Suisse received 10 billion Swiss francs in the form of loan as it was able to raise capital from private investors. The turnaround of UBS and the downfall of Credit Suisse was because of one of the strategic decisions that were taken by both the banks 13 years ago. Post-financial crisis, then UBS CEO, Oswald Grubel decided to shift its focus to wealth management business, which is stable and profitable, and significantly downsized its investment banking business. His successor Sergio Ermotti also believed in the same strategy of growing wealth management business while not completely ignoring the investment banking segment. This increased UBS profitability gradually over the years, and though there are legacy issues that hurt the bank today, it doesn't have any significant issues post-financial crisis except for French tax evasion case, where it was ordered to pay 3.7 billion euros, which was the largest ever fine imposed for tax evasion, but UBS had appealed against this decision and the matter is pending in the court. On the other hand, while Credit Suisse also faced losses in the global financial crisis, it failed not to repeat the mistakes from the past. Implementing aggressive strategies in its investment banking arm, followed by unstable leadership and poor risk management, lead to list of following significant issues. In 2018, it paid out $77 million to regulators over the bank's failures in anti-money laundering controls and compliance with sanctions. In 2020, it paid out $88 million to its regulator for spying on its former employee Iqbal Khan, who joined rival UBS, as president of wealth management. In 2021, the fall of Archegos Capital Management wiped out Credit Suisse's entire Q1 2021 net profit of around $4 billion. In 2021 again, though an approximate loss figure was not disclosed regarding Greensill failure, there is a high possibility that it caused billions of dollars lost to Credit Suisse. Cash inflows and outflows are considered as one of the primary metrics for Swiss banks, and it was reported that cash outflows, that is, customers had withdrawn their deposits of around $120 billion only in the fourth quarter of 2022. In 2023, PwC, who is the external auditor for Credit Suisse, issued a report stating material weakness in its internal controls over financial reporting, which means that internal controls were not effective in preparation of its financial statement. This is a specific requirement for systematic important banks where auditors provide an opinion on financial statements and the internal controls over financial reporting separately. As the final nail to the coffin, collapse of Silicon Valley Bank and Saudi National Bank's decision not to fund Credit Suisse anymore led to a free fall of Credit Suisse share price. Swiss regulators, to reassure confidence to the investors and to avoid ripple effect in a high inflation and high interest economy, forced UBS to take over Credit Suisse, and it was not an option provided to either of the banks. We will analyze key learnings from this takeover in terms of finance, management and organization strategies in the upcoming video. Stay tuned.